We are diving into the National Association of Insurance Commissioners for the national portion of the life insurance exam. The NAIC is a voluntary organization made up of the top insurance regulators from all 50 states, plus the District of Columbia and 5 U.S. territories. On your exam, you will frequently see questions trying to trick you into thinking the NAIC is a federal agency or that it has the power to pass laws. It does not. The NAIC is essentially the ultimate networking and standard-setting body for state regulators. Because insurance is regulated at the state level rather than the federal level, the NAIC acts as a bridge to ensure that a life insurance policy in Texas does not operate in a completely unrecognizable way compared to one in New York. The NAIC plays a pivotal role in the regulatory landscape because it facilitates the exchange of information and coordinates regulatory activities between jurisdictions. On the exam, you might be asked about how the insurance industry manages to stay consistent across 50 different sets of state laws. The answer lies in the NAIC model laws, which are template regulations developed by industry experts and regulators. While these model laws do not become active in a state until the state legislature actually votes them into law, they represent the gold standard for insurance regulation. One common exam trap is a question asking if the NAIC can force a state to adopt a law, and you must remember that the NAIC has zero legislative authority. They are an advisory body that uses peer pressure and technical expertise to encourage consistency. Another major concept for the national exam is the role of the National Insurance Producer Registry, or NIPR. This is a nonprofit affiliate of the NAIC that acts as a central clearinghouse for producer licensing information. The NIPR manages the Producer Database, which contains information about your license status and any potential disciplinary actions taken against you by any state. This system is what allows for the smooth processing of non-resident licenses, so that a producer in Florida can easily apply for a license in Georgia without having to submit duplicate paper files. You might encounter a scenario on the exam where a producer is moving states or seeking to sell insurance in multiple states, and you will need to identify the NIPR as the system that facilitates this interstate cooperation. To help you remember the purpose of the NAIC, you can use the mnemonic, "Negotiators always insist on consistency." This phrase helps you recall that the NAIC negotiators create the consistency of model laws without actually having the legal power to dictate state policy. It is also important to understand the NAIC role in financial oversight. They develop uniform financial reporting standards and risk-based capital requirements that every state uses to monitor the health of insurance companies. This ensures that a company is not overextending itself and that it has enough money in reserves to pay out the death benefits to beneficiaries. If you see a question about the annual statement or who standardizes financial reports across the country, the answer is the NAIC. Remember that even though the NAIC sets the standard, it is still the individual state commissioner who reviews those reports and has the authority to step in if a company is becoming insolvent. The state commissioner is the one with the authority, while the NAIC is the brain providing the blueprints. When you are looking at multiple choice options, look for keywords like voluntary and coordinating, while avoiding options that suggest the NAIC is a federal branch or a legislative body. The McCarran-Ferguson Act established that states regulate insurance, and the NAIC is the mechanism that allows that state-based system to function effectively on a national level. If the exam asks which organization maintains a central warehouse of producer data, the answer is the NIPR through the Producer Database. The Producer Database tracks detailed information, including names and addresses, as well as administrative or criminal actions taken against a producer, which is shared across all participating states. This transparency is a key part of the NAIC goal to protect consumers. If an exam question asks how a state regulator in Oregon knows if a producer had their license revoked in Maine, the answer is the NAIC Producer Database. This system effectively eliminates the ability for bad actors to jump from state to state and continue unethical practices. By focusing on these distinctions between advisory power and legal authority, you will be well prepared to navigate any questions about the NAIC on your national life insurance exam.